Hi, everyone. Welcome to the Well Word Podcast. My name is Conrad Ruiz, and today I'm with Josh Krafchick of 369 Financial. I want to share with you a bit of background about Josh, and I want to let him introduce himself because I think it's really important that I highlight just how long of a relationship Josh and I have had in my pursuit of business. Josh, I think you and I, correct me if I'm wrong, but I'm pretty sure you and I met through Ripple Effects, which was a network based out of upstate New York. And ironically, at the time, you were just as much a part of Florida as I currently am in terms of your living there. And so it was very strange. I mean, it's possible, but it was very strange that of all the virtual networks that you and I both attended, we happened to attend that one that was primarily based in upstate New York in terms of where its physical relationships were primarily. And then through that, I mean, that was way back in 2020, 2021?
Yeah, for sure. And
Okay.
I'm glad that we met. It made worth joining to meet you.
Yeah, likewise. Yeah, despite the fact that we're no longer a part of that group, here we still stand as a relationship.
Does that group even exist still?
I want to say Christine has still kept things up going. I'm not mindful or paying attention necessarily, but I do believe that still runs. But that being said, Josh, I knew you initially as a financial advisor. And I'm sure anyone who comes across you for the first time that's going to be probably their initial experience with you, professionally speaking, at least. But there's so much more to you. And I think it's been a disservice to many people to not get to know the financial advisors in the network for everything else that they are, including the fact that they provide financial advice. Like, that is something that goes without saying, of course. And I'd be curious to talk about this from a market perspective, how people end up communicating and experiencing financial advisors and financial advice on the whole. But with that said, Josh, welcome to the Weller Podcast.
Thank you for having me. Happy to hop on your podcast, and you've been on mine, and everything's coming full circle.
Yes. Josh, please share with the audience a little bit about who you are and where you come from.
Yeah, for anyone who doesn't know me, I'm Josh Krafchick, and I mean, I've basically dedicated my life to learning the best ways to invest. It all happened on accident. Basically went to school for math, keep things simple. Ended up in the financial industry because the job market sucked, and quickly realized that most financial advisors know nothing about investing. They just know enough to have a good pitch, and they know a little bit more than their clients. And if you know a little bit more about someone and you consistently stay a couple steps ahead of someone, then they may never know that you are actually just
perpetually winging it.
Perpetually winging it. And most people are winging it, and not all. Everyone has to realize not all professionals are created equal. There's the best doctors, the best attorneys. There's also the worst attorneys, the worst doctors. Just like sports, there's the best golfers in the world, and there's professional golfers who are ranked 136th, but they're still the 136th best golfer in the world. I mean, there's levels to all games. And I found when I left corporate America how closed off people were to actually just having a normal chat with me, just because they would see I was a financial advisor, and they'd be like, "Whoa, I already got an advisor. I'm good, thanks." I was like, "Hey, I'm just looking to get to know you as a person, because there's so many levels to relationships. You have your professional relationships, you have your social relationships, and some people focus too much on the business relationships and they neglect the family relationships, the social relationships, and then those people become very one-dimensional, and fast forward 10, 20 years later, and they're very alone." So that's a little bit about what's happened since leaving corporate America to kick things off here.
Josh, I remember one of the first things that you taught me that I've taken to heart a lot, and I want to say I've even applied a lot recently, is the first time you hired me to have a simple 1-hour consult just to talk about where you were in your business operations, what things we could do to support you delegating or automating certain systems, because as you've highlighted in the past, you wanted to focus more on the money management side of your business. That's what mattered most to you. That's where your high level skills were. It was not performing data entry between systems and, making sure that the leads that you're trying to connect with are, moving from one system to the other. I particularly love that you said, I can't remember what part in that consult conversation, but you said, in a certain sense, with all transparency, you said, I did this to disarm you in a certain way. One, you generally wanted the services, which is great, right? Like that was not a facetious interaction. But at the same time, at that point, and even then, I was still practically novice in my world of networking, and yet I quickly held the financial advisor sort of ick, and
it's a big ick.
It's a big ick. It's a market.
We put the ick in Ozempic. I mean, most financial advisors are not good. Most of them work at large corporations and they just do what the big corporations tell them to. So yeah, I mean, it's definitely a taboo subject.
Right. And yet here you are playing in the market space with the same title as as a lot of those other relationships. And so you're going against a market sophistication that's catered toward that primarily. Mm-hmm. And that's what you have to face with every single day. But again, you did this thing where you said, look, I like Conrad, I like who he is as a person. I have no guarantees or expectations that he and I will work together in the capacity where you as the financial advisor benefit serving me. But ultimately, you did manage to disarm my sense of expectations of you as a transactional salesperson in the financial advising world, because you offered to invest time and resources toward my business. Mm-hmm. Of course, in the scope of helping yours, but still, that changed everything for me. And I want to share that particular wisdom, that little insight, I've taken into so many other business relationships where it's like, what transaction do I need to make with this person? What things do I need to buy from them in order to make them feel like, hey, look, I care about this not just being me selling to you type of relationship. And also, like, what's in this for me? Like, what can I get out of this relationship in terms of a business offer or service, a product that could support me? I love testing out what other people have in the market now. I get this opportunity to build off these experiences, and I have to give you that kind of onus. So thanks.
Yeah, of course. I mean, if you really want to get to know someone, buy their product, but that doesn't mean you have to buy their top level products. Like, hey, how much does an hour cost? It's $1,000, but they're selling $5,000-$10,000 products, and you want to get to know that person on a personal level. It could be a good investment. But the key is not to expect anything in return. It's like when you give a gift to someone, you can't expect a gift in return. So, I mean, I never signed up with you expecting you to like sign up with me like, hey, I paid you money, now you need to pay me money. The idea was I felt like you have skills I don't have. And if I want to learn and get those skills from your brain into my brain, you need to be compensated for that. That's only fair. Because I can't just like barter and then use our barter to go buy milk and eggs from the grocery. That's not the way the world works.
Speaking of someone who knows money so well, which I want to dive more into now, I appreciate that you understand the philosophy that barter capital, or chickens for horseshoes, as I like to call it, is an old experience. It definitely had its capacities, but we generated liquid capital. We created this currency model, not without its problems, but we created this currency model to increase the flow in which the obstacles from making chicken to horseshoe trades was very apparent and very difficult. Mm-hmm. Even if you, and I don't want to get into this realm of economies in small scales, but that's essentially what people always wish for. Is like, oh, I wish my economy was more efficient. I wish my dollar took me as far as I could. I wish my chickens took me as far as they could. It's like, well, we're doing our best here, right? We're trying to pursue efficiency by design. There's even whole players looking to arbitrage within these systems in order to create both liquidity in the market and define, what things aren't being as well valued as they should be, and kind of putting that awareness in action, by showing how right they are, being rewarded for it. I mean, to a certain extent, that is, I imagine, what you may call investing, or maybe I just convoluted the whole idea. So I'll let the money management expert in the room speak about that. Josh, what separates you from every other financial advisor in having this sort of more extraordinary skill set in investing?
I mean, there's a lot of good financial professionals out there, and there's a lot of people who you can give your money to, and they're going to do a good job. What I've learned from not being like a star athlete or even a star student, like I was smart, but I wasn't like the smartest. I was good at sports, but I wasn't the best at sports. So I learned very early I wasn't going pro in sports. That dream was dead as a child. But some people hold on to that dream, and letting go of that dream at an early age. Sports are great. Like, you can learn a lot from sports about yourself, even if you're not good at it. And ultimately what I learned and what I've come to realize is the business and investing world does not care what you look like, doesn't care how you grew up, doesn't care how tall or fast or strong you are. But if you dedicate each and every day to learning just one more thing, or just studying something every single day, eventually you'll surpass everyone, regardless of your physical stature, which, you have to be blessed with genetics to be good at sports. You have to at least have that baseline, regardless of how hard you train. And ultimately, I was tired of watching people like invest and get bad returns. And I felt like I had to leave corporate America to attempt to make a difference, whether I failed or succeeded. And that's what led me to leaving corporate America. And a lot of people said I was stupid for doing that.
As I'm sure many people have heard by proxy of that choice, it's a leap of faith, and some would define it as non-secure, unsafe, risky, dangerous. It is. I mean, I won't give them that benefit. I never entered corporate America to begin with. I dived right headfirst into entrepreneurship with all manners of stubbornness, and I still recognize every day what risks I've enabled myself into. I also recognize what blessings I have had in the way of my family and the way of my sort of upbringing, my education, like the comforts that I'm allowed to take the most advantage of in order to live in this entrepreneurial lifestyle without as much worry as some of my friends. It's a blessing that I cannot disassociate from ever. It's something I have to sort of take. It's a badge of pride that I want to wear and say, like, look, I'm doing this because I can, because I can afford to, and because I want to, and because I need to make this. This is how I pursue my art, my creation. So I hope for anyone who is curious about making that plunge. I mean, this then gets into. I do want to address some of the matters of fact that do come with leaving corporate. At least briefly, which are, it is, again, that leap of faith. There is a financial process that you have to overcome. The best advice that I wish I had taken more seriously growing up, and diving headfirst in entrepreneurship, I wish I had recognized the spirit of getting a day job and then maintaining that day job presence until the business is sustainable in its own right. Going just the pure entrepreneur way, it sounds great to have more time invested into business, but you shouldn't need to invest so much time into business. I mean, it's certainly an accelerant if you're doing all the right things, but there are psychological effects, the safety net of money at the bottom. Yes, people will call it a crutch, but I would also say it's an important handicap when you're just getting started. And I think knowing how to make that transition, especially depending on the different familial relationships that you might have, the dependencies others may have on you, other responsibilities and commitments, that may all make more sense than just going pure off the wall, like leave corporate and then you're a runway basically. Your startup isn't necessarily the next technology that's supposed to change the world. It's just this small business that you have, being a service provider in a very specific niche. But either way, it's still a startup in the form of a business that's new, and it needs to basically launch, get itself off the ground. You need to launch, get yourself off the ground, learn to market, learn to sell, learn to deliver service, finance all of that, and administrate accordingly. Like, okay, cool. Yeah, it's going to take a while, and it's going to hurt every single day. Josh, can you, I know you possess more than just financial advice as a pursuit of your professions. Can I invite you to share more about your experiences as an author surrounding financial literacy for children? Can I also invite you to share a little bit about your experience you brought up golf earlier, and we brought up the professionals. I thought it was a really interesting analogy given what you've built in that space. So I would love to hear more about Don't Have a Stroke.
Yeah, I could definitely talk about it. And too many people want money versus creating assets. The assets will give you the money, but people want the money, but not the asset. So you have to like flip your brain. It's like, how do I create an asset that can grow over time to give me the cash flow that I need to live my life? Because ultimately, like, the path that you took is cool. And I would challenge anyone to ask themselves, when you were broke, if you were broke at any point in time, did you have fun? I had a ton of fun when I was broke. You just get resourceful. And then you get money and you have a choice to make what to do with that money. And I made choices such as going down the road of writing children's books and investing time and money to learn how to do that, as well as investing time and money into getting a United States patent on a golf product that ultimately is on pause right now, because ultimately right now I'd say it didn't work. It failed. What I learned, though, is I hear everyone on social media complaining like, oh, our kids need to learn about financial literacy. So one day before ChatGPT was created, I had an idea to write a book, and I wrote it probably in like 20, 30 minutes. And then I used Google to make sure the words could rhyme, sent it to my wife, and she's like, oh, is this a story that your grandparents told you like growing up? I was like, no, I just wrote it. And she was like, no way. I was like, yeah. And that was the first one, The Boy Who Picked Up the Penny. And it starts off, once upon a time there was a little boy who noticed something shiny underneath his toys. He picked it up. It was brown and bright. He smiled from cheek to cheek with great delight. And I was like, okay, this sounds cool. And then it took me a year to get it onto Amazon because I was too stubborn to go on to Fiverr.com and pay someone $50 to format the book for me. I just kept like trying to do it on my own. I go, you know what? I bet someone can do this a lot faster than me. I'm going to have to pay for that time, but at least this project is going to get done. And then boom, $45 later, I'm on Amazon. But it took me a year of being stubborn to realize money buys you time, not just things. And that's what you teach a lot of people about as well. I don't know if you have any comments on that before we talk about more about like learning about patents and manufacturing and design and how all of that relates to investing, because where does stuff come from that we buy? It comes from all sorts of places.
I will say briefly that the money buys time conversation is not only one that I particularly love, but it's one that I particularly experiment with a lot. And I agree that, to your point, Josh, that because having assets allows me to acquire money, I can then invest that money towards the things that I need in order to build more assets, which is additional time. And if that's not a flywheel I don't like to pursue, then I don't know what I'm building inherently.
Yeah, for example, I was looking for my daughter's pacifier the other day. Couldn't find it. I spent 15 minutes looking for it. And I said, you know what? I bet they sell these at the store in a pack for like $10. I was like, I've already spent 15 minutes looking for this. Am I going to really get angry looking for something I could go buy for $10? I was like, I'm just going to go buy the $10. I'm going to spend it. I'm going to get 4 pacifiers. And now I don't have to worry about it. And then they're probably going to show up when I'm least expecting it. Now I'm going to have 8 pacifiers. But like thinking about those things, like how mad do people get looking for something they could replace for $20?
Short of the irrationality around certain types of sentimental values, which is not purely irrational, it's just, to your point, depends on the subject of the object. I will share that this is actually a really funny story. My dad has always complained to my mom. We have my family owns a Mercedes car, 2015. It's one of those with the digital key at the top. And we've known for a very long time, if we ever lose that key, it'll be extremely costly for us to have to replace it. And it should be real. And it also could be disastrous for us in terms of timing of things. So like, let's get a second key. Let's get a second key. That was my dad's constant like call to action. My mom she never took it as a priority. And so just the other day, my dad hid the keys during an argument. I wasn't aware of this. I didn't realize that this was going on. My dad hid the keys during an argument, and my mom went looking for them, and she couldn't find them anywhere. And she swore up and down, like you know how when you lose something that important, you like become a detective. All of a sudden, you like retrace every step. You get the super meticulous, self-analytical, retrospective mode. It's hilarious, painful but hilarious. And she didn't find it. And so she called a mechanic. The mechanic had to come by. They had to access the car. The alarm sounded off. Security came by. Hey, is this your car? Mom, she's having a field day, right? But eventually, after going through all this trial and accepting the fact that she very well may have just lost the keys, she went ahead and got a new set of keys. She got the mechanical pins that allow us to open the car door, even if we don't have the key fob with us, just in case. So now we have all the preparations necessary, right? And it's not necessarily purely parallel to your story, but we spent a lot of time looking for those keys. And I recognize to your extent, this is a more challenging example, right? The pacifiers is a simple math. The key fob is a little bit more, pressing, because if you need to drive around, if you need the car, you need the car. Yeah. So what was fascinating, all in hindsight, of course, turns out Dad had put the keys in a drawer that we never look for because we don't sit at his chair and his desk. And I want to say, just because he's old, this adds character. I want to say he forgot he did that, just because it would make for a more telling story. But I think the reality is that sharp-ass old man did not forget at any point in time. He just played the facade up until the very freaking end. And so my mom was so pissed. But for me, looking back on it, especially with regards to this conversation, it enlightens me that my dad wanted to create security. By having duplicates, he also wanted to showcase the crystal clear example of like, okay, you're in this problem. You need to go get a new set of keys because you've lost the current one. You don't know where they are. Even if they're somewhere in the house, time is of the essence. If the next time you need that car, or then ever an emergency, you're now in a predicament where you can't access a utility that you need. What is it going to cost you? What are you going to need to do? How are you going to process and execute accordingly? That was, I would say, well worth we could have just gotten the key fob. The fact that we had to bring the mechanic over and do all that costed extra, but let's just call that the lesson.
Where was your mom attempting to go?
We didn't have any place to go necessarily at that time. We had just come back. She'd just come back from grocery shopping.
Okay.
And so this was a non-emergency issue. I mean, the predicament wasn't real. This was a fire drill in its own regard. But Dad did this in such a way, argue if his methods could have been better, but he did this in such a way that he'd have to force my mom's hand to actually go out and get a new key. And he was like, it's worth the cost. Not just of forcing the action of getting the key, but forcing the action of you lost the key and now you need to know what it's like to get access back into your car through a mechanic in terrible conditions in all state of, like, I have to hand it to him as I keep talking about it. I'm like, God damn it. This happened yesterday. We found out the keys were in that desk yesterday. But this whole ordeal happened the day prior when my mom was literally going through a 24-hour sprint to be like, is it with the valet? Did they pick it up? Did I drop it downstairs? I remember when I pulled the groceries out and I always have the lanyard on. That's where the keys are. Just going through all these detective like motions of like, where did I possibly screw this up? Because there's no way.
Did she ever ask your dad where the keys were?
Yes, and he didn't tell her. He
knew.
genuinely did. He genuinely did withhold truth.
Told you. I told you, we needed to do this. But people are stubborn, and people sometimes don't want to listen until there's a problem. Just like doing due diligence before you work with someone, or not signing up for a 3, 6, or 9 month project and just paying more for an hour of someone's time to get a feel for them first before you invest more money. Obviously, you're paying more for the hour than you would in a project, and that's how they're going to attempt to sell you on the idea. But I'm like, it's still more money. I don't want to give you this much money right now. I'd rather pay for your hour, pay for $1,000 an hour than give you 10 grand just to sign up with you because the internet says you're good.
It's a discovery that can then lead into a retainer-like relationship that is more cost-effective per hour, if you will. But also, there's just a different scope involved. Now both parties know a little bit more about what they're getting into, what their objectives are, what guarantees they may want to set differently. A discovery is a discovery. How can you guarantee a discovery other than I'll show up and I'll discover and I'll do my best to be the best provider that I am. Beyond that, once you get into an actual project or a 30 to 90 day scope of something, then you start to set different expectations for like, here's what I want to be able to guarantee I'll deliver for you in this time. And I've seen some really good models where it's like, if I don't get this to you within the 90-day period, I'm going to continue working with you until I get this problem solved. And it's not going to cost you any extra, right? You pay me. I gave you a 90-day window because that's how long I felt it would take, barring all considerations of scope. You know, there's a risk involved with that certain individuals will take. And if they happen to go over that due to circumstances, then they'll say, look, it's on me. It's the extra time. It's on me. I know we're delayed. We're past your deadline of when you wanted to get this accomplished based on what I said as possible. But hey, here we are. Here's what I'm going to do. You paid for this already.
Totally.
Okay.
And people look at investing the same way. People look at the percentage versus the dollar. Like I had someone reach out to me the other day, Roxanne's cousin. Roxanne's my wife, and he's still in school, and I chit chat with him about investing because it's fun to talk with him about it. And he said, hey, today was my best. I made the most amount of money today, but not my biggest percentage win. And I said, would you rather have more dollars or a higher investment percentage? And he's like, dollars. I was like, well, that's the point. Who cares what the percentage is? You want the dollars, not the percentage. And that's where a lot of people get it wrong, is like, how do you make the most amount of dollars versus people are chasing a percentage return. And when you start considering that, it puts you into there's levels to this game, and people are playing a game they think they can play just because they have access to information. Just because I go on YouTube and watch Tiger Woods with Butch Harmon do a one-on-one lesson, who are some of the top golf professionals in the world, doesn't make me Tiger Woods or Butch Harmon. It's insightful. I definitely learned something, but there are still things that they're talking about that I don't fully understand because there's levels to it. And that's where a lot of people get it wrong. And ultimately, I came up with a golf product because I love playing golf. And I was tired of taking lessons and paying money, and my scores weren't going down. I was like, I'm investing time and money, but I'm not getting results. That's a bad investment. So I shifted my focus. I was like, what about the mental game? No one here is teaching me about the mental game, and everything's a mental game. Like, how do you grow resilience to evolve? And that's what led me to creating the golf product. I mean, you know it, starting as an entrepreneur, like Conrad 5 years ago is not the same Conrad now.
Especially on the mental game.
Especially on the mental game.
Come a long way.
And that's where a great financial professional can prevent you from doing something really stupid. I mean, I just met with someone the other day who works at Amazon.com, and he has all these restricted stock units, and he wants to pay for his child's education. He's like, should I sell to Amazon right now? It's at a good price. It's at a good price. It's at a good price. I was like, no, that is not smart. Like, let's have a strategy before you start pushing buttons. And that's why the investment game for me, I mean, I look at it as technology makes the investment game easier. You got a bunch of people gambling on Robinhood, pushing buttons. Makes my job easier because you have more people in the game who don't know what they're doing. But ultimately, getting back to don't have a stroke. Yeah, I came up with this golf product to help golfers with their mental game so that they could reach their full potential, and went down the journey of developing a physical product. What do you think would be fun to talk about in regards to developing that, Conrad?
Honestly, Josh, I love the brand, and it so speaks to your. I'm sad to hear that it failed.
It's not over yet. So here's the silver lining.
Okay.
My goal is before the holidays kick in, I'm going to take all of the golf inventory that I have, and I am going to ship them to various golf charities throughout the country that focuses on teaching children about the game of golf. What they do with them is their choice. But I was like, how can I turn a negative into a positive? I'm like, all right, did I sell a good amount of them? Yes. Did I grow a TikTok that had hundreds of thousands of likes and almost 10,000 followers and went viral multiple times, millions of views on multiple videos? Yes. It still failed because I ran out of time. Also, people want apps now. They don't want a physical product. Versus like, hey, you're using an app. You've been using the same app for 3 years. Your handicap's gone down a little bit. You need to do something different to get different results. Otherwise, you're just going to suck. Right. You're not going to separate yourself. So, I mean, I came up with the idea. I developed it for myself. Helped me get into the 70s, which is like really good. And I was like, well, if it helped me without doing any market research, it's got to help at least one other person. And I was like, this is a cool idea. And then Robin Williams did a bit about the game of golf. And the punchline is, that's what we'll call it. We'll call it a stroke. Because every time you hit the ball, you feel like you're going to die. He drops a big F-bomb in there. And I was like, don't have a stroke. I was like, attempt to say it and not smile. I was like, this is cool. So I was like, I have a cool name. I have a cool concept. It's helped me. I did a patent search. You do a patent search first. Then you're like, hey, there's nothing out there. Let me get the patent. Which, in retrospect, if that's the right word, you don't want the patent first. You want to test the product first. See if it sells, then protect it later.
Because of the costs associated with building that moat.
Well, the time, too. If I would have like ordered 100 samples and see if those 100 sold, that would have been a good experiment. Versus I went all in. I was like, I'm gonna get the patent. I got the patent, so that's cool. I'm a patent owner. I have it. It comes in like a beautiful piece of like manuscript. It's like gold lettering, says United States on it. Like, that's super cool. And then I mean, the positive is like people are like, oh, you failed. You lost money. Your product didn't sell. Well, I learned about how do you get a patent? How does manufacturing work? Which, if you remember, in 2020, manufacturing is what caused everything to go up in price and the delays. So I learned, how do things ship? They ship by sea, most of it, or they ship by air. Then they have to come in these ports. Then you see, like this year in 2024, that bridge in Baltimore collapsed. Now it's a big ripple effect on the supply chain, which the supply chain is very sensitive. It's like you're driving in your car and you have to recalculate how you're driving, and you take a wrong turn. How much time does that cost you? Now multiply that by a bajillion. That's the supply. That's as simple as I can explain the supply chains. Like you take a wrong turn, it costs you 1 minute. If you think about like a company like Federal Express or UPS, if each of the deliveries that they make cost them 1 extra minute throughout the entire year, how much does that cost the company?
Right.
Well,
It's
if it costs
the
the company more,
scalability of an inconvenience.
well, what do these smart companies do? You're not going to ship something from Washington State to Florida yourself. You're not going to hop on a plane, put it in a suitcase, fly there, fly back. You're going to ship it. And they're just going to pass those costs on to consumers. So learning about manufacturing and how it works and how it affects the consumers teaches you on investing because you know how these companies work because you've actually gone through it yourself and seen it on a one person scale. But then if you think about it, you're like, well, if this is on a large scale, it's even a bigger effect.
You've studied the theory, but you've also gained some practice. And I think the practice is so much more compounding in its lessons and its teachings than theory. And it may be a little more costly ultimately, right? Cost of picking up a book and learning about something is small. It's only time and whatever resources it took you to acquire said knowledge. But to really get experience and exposure and lessons in real time, that is, I mean, some people would call it priceless, but it is just, in fact, more expensive.
You can't just read a book. You have to read the book and practice what's inside the book. Otherwise, you're just reading a book. Like, for example, this shirt. This shirt is 92% polyester, 8% spandex. This is very similar to like a Peter Millar golf shirt, which retails for about $98 here in the States. I bought this as a sample. It also has a stiff collar. Like, have you ever had a polo where the collar like turns into bacon collar?
Oh, okay. No, but I can understand what you're describing.
Unlike a less quality shirt. I bought a sample from China for $40. And they're like, hey, the sample's going to be expensive. And I was like, well, how expensive? They're like, it's $40 for one. And I was like, well, I just saved $58.
I just saved $53.
$58 plus tax. And then I did the experiment where I did 369 Financial embroidered in the shirt. I did it on a one sample, and I noticed like the design's not good because it's black on black. Like there's like the pattern's cool, but you can't see it. So I was like, hey, I spent $40. I learned this isn't the right shirt to have my logo on it. It doesn't look the best, but it's a really comfortable shirt, and I love it. And I got it on half off. And then I learned that like this isn't the right shirt for our company. And then I go back and I find another shirt that's like all gray. It's got like a black line here. And I was like, wow, black line, white lettering, that'll show. And then I'm going back and I'm like, hey, I need another sample. You know, how much is that going to cost? And then you learn about the manufacturing rather than just going to somewhere like Custom Ink. But Custom Ink is doing what I do. You know, these shirts here, you buy them at scale, you can get them for probably less than $10 a shirt and then mark them up to almost $100 a shirt.
I want to distill this a little bit further. You're bringing up something that I had a conversation with my grocery shop. I went to the grocery store after we had solved the whole car fiasco with Dad. He loves it when I take him because
the calamity car of Conrad.
Yes. It's also the calamity grocery shopping experience, according to the old man, because whenever I take him, smooth sailing. Whenever Mom goes, it's like, don't go running into aisles to go purchase things that we don't already need. Which is a whole other conversation worth having if one wants to procure into the supply chain that is my family fridge. I was talking with the grocery teller about, because I don't take bags. I have bags in the car, but she still has to give us a sticker to let everyone know, like, we did purchase these things, even though I have a receipt. So it's one of those weird things where it's like the policy is like, it's dumb for the sake of being extravagantly there and in front of everyone. But okay, whatever. I didn't write that. I didn't write that SOP. I wouldn't approve of that SOP. The cost of convenience is what I told my grocery teller. She was complaining about how she was sharing with me about how up north, and I don't know if you're experiencing this now in Maryland, that most grocery stores don't offer bags anymore.
They charge. They charge for the
Yeah,
bag.
they charge you for bags that are reusable, or they tell you go put it in your car and as is and deal with it. Here in Florida, we still have plastic bags. And it was interesting. I was almost trying to field out where the grocery tellers, where she was seeing the mental game of convenience. Because on one end, I thought she was talking about how, hey, having the plastic bags available to you right here and there makes it super convenient. Da da da. This thing costs pennies on the dollar compared to paper bags. Like there was a time in history when it was all paper bags, and that was part of the cost of doing business and things like that. And I was trying to, in as little time as I could possibly do it, all in Spanish, no less. I was trying to communicate this convenience cost. What I was really doing was I was highlighting the convenience cost on the environment as much as I was calling out the convenience cost for people who, once they're used to something that's convenient, they want to continue doing it. It's almost like a drug or a dependency. And
Amazon.
That's one way to summarize that whole point. But in your description, Josh, as well, the custom inconvenience comes at the cost, interestingly enough, of you not going through these motions of experience yourself. If you're a really successful individual and you just don't have time to go down this rabbit hole of learning, and it doesn't apply to you, and you can't. And this is what I love about your business and your approach to business as a whole, Josh. Your model is, I'm an investor. I am going to learn everything I can about investing through my experiences and principles and anything in addition to just investing, in addition to providing others with financial advice surrounding investing, surrounding money management. Mm-hmm. This all comes down to one spot. If you're I don't know, I'm going to try to throw if you're a golfer,
mm-hmm.
you may not inherently care, although granted, maybe you do. You may not inherently care at first value that, custom ink is saving you the convenience of having to purchase your clothing en masse. But to what you just described, if you're going to produce your own product line, you want to know what it takes custom ink to figure out all the nooks and crannies to getting your product out there. You want to know because you want to do it yourself, not because inherently you want to save on the cost. You're adding so much in time, but you're ultimately generating an asset, as opposed to just taking the funds from, in this case, the golfer is the asset, right? And their sport and their ability to perform the sport is the product. That then, you take that generating that money from that asset, you then sell that off into go buying, whatever, your custom t-shirts or what have you. I don't know. I love it when a good business owner recognizes that part of their system structure is everything I do brings me back to this. And this is what I'm really, really, really good at. This is what I aspire to be, like a pro in my own right, regardless of my size, stature, general good looks, like all those other assets I didn't inherently have. Josh, you're beautiful and super strong, and you're an incredible family man. I think you could be successful in so many regards. Maybe not professional basketball, but that's
Definitely
okay.
Not. I mean, all of the info is out there. Literally, you could find Warren Buffett saying, if you want to be ignorant, if you want to be an ignorant person, invest in the S&P 500 and just don't worry about it, or an exchange trade fund. So if you want to be an ignorant investor, that's what you do. And you're only going to get the same results as everyone else that's ignorant. Versus, I remember I was on an airplane flying with this guy in like 2015, 2016. And of course, like sometimes they chit chat. They're like, oh, what do you do? I was like, yeah, I do money stuff. And he's like, the one question everyone always asks, what's a hot stock tip? And I go, hey man, I actually got one for you. And I was like, do you know Chipotle? They're going through this E. coli thing right now, and it's really hurting their business. But people love Chipotle. They love that guac. And once they get through this, I bet they're going to do pretty good. And Chipotle, I remember it was trading at like $350 a share. He says, oh, it's kind of expensive. And I was like, well, it was over $1,000. So you're getting it at a good price. You're not paying $98 for a shirt. You're paying $25 for a shirt. And then I remember looking, I was like, it went from like 350 to like 250. I was like, man, I bet that guy hates me if he bought it. And if you fast forward and look at the chart, that guy listened to me. He definitely paid for a lot of flights there. So that was definitely money well spent to sit next to me. But that's why people aren't good investors. They're not willing to like sit down, analyze the situation, do the homework. I would be like, hey, I'm gonna go eat Chipotle, and every time I would go into a Chipotle to eat and spend the $10, I'm like, I'm gonna get a piece of information from someone that works there. I literally would ask them like, hey, like, how's it been? They're like, we're getting busier every day. We're getting busier every day. Every time I'd walk in, there's a line. I'm watching the stock price tank, and every time I go like, hey, I went in there with a full suit one day. I walked in. I didn't even order anything. I walked right to the cashier. I said, hey, how's business? And she goes, yo, we're slammed. I go, have a great day. And she's like, who are you? And I just walked out.
Sounds like an infomercial.
Yeah. So, I mean, that's you got to dig in. You got to dig into the company. You have to become a user of the company and really learn the ins and outs of it. And that's why people like Warren Buffett are so successful. He buys stuff that he knows. And I just told this to our clients and people that follow us. Leading up to 2000, Warren Buffett was underperforming technology by like over 140%. And people were writing him off like, oh man, he's missing out on this tech boom. And then the tortoise beat the hare. And the rest is obviously history. But I mean, that was about 24 years ago. People were saying he was old then. Now he's like 94, 95.
We lost Charlie.
We did lose Charlie. You know what the one thing he said he wishes he'd done?
Are you referring to Charlie?
Yeah, Charlie Munger. He said the one thing he wished he'd done in his life.
Tell me, please.
He said he wished he caught a big tuna.
Okay.
Like fishing.
Yeah.
He's like, I wish I could have gone fishing and caught one of those big tuna. Like, that was the one thing he said he wished he'd done. And I was like, man, I want to go fishing now. I don't even think I like fishing, but I was like, just to do it, I bet it's a fun experience to do once, but it's not like something I'd want to spend every weekend doing. But like realizing no matter how much money you have, it's the little experiences that you care about at the end. Not just like, oh, I made a bunch of money and no one shows up to my funeral. Because they said another thing. They're like, hey, do you know why a lot of people go to a famous director's funeral in Hollywood? Just to make sure that they're actually, in the ground. I was like, there's probably some truth to that. So, I mean, it's all about figuring out what you want out of life. Do you want to live an average life? That's cool. You want to buy the house, put a bunch of money into a house, stay in a corporate job, save up money, be ignorant, then just, that's cool. Some people like living their life like that, playing video games and chilling. It's just not me. I'd rather do what I feel is best and lose clients than do it the other way and keep clients happy.
Josh, let's end on that note. Thank you for our time.
For sure.
Everyone, please look out for information attached to this podcast episode such that you can find and learn more about Josh. Josh will grab your website, your social media profiles. What's the best way for people to reach you if they so need to?
Just go to 369financial.com or just Google my name. I'm the only person with this name. So easy to find me.
Convenient. Without the cost.
Zero cost.
All right. Josh, thank you. Until next time.
Thanks, Conrad. Bye, everyone.